Welcome back. Joining us on the show now is Peter McGuire. He's CEO at XM Australia. Peter, hi, and what a week this has been, especially when you look at the crude oil prices. Constant declines. We're trading at an 11-month lows right now. And even as there is a bit of a buying in the day today, we still are at the levels below or before Russia-Ukraine war broke out. One, how do you look at this volatility in the crude oil prices? And what's your sense on where are we closing this year now?
Well, good afternoon, Manisha. I think a couple of things. What really spooked the markets in my, I suppose, perspective was when those Wall Street bankers came out and said that they're worried, certainly as far as, the sounding of alarms and the situation that's really presenting itself goes risk off. And that, I think, has put a level of fear into the markets. It certainly was demonstrated by the price of crude, and it's had a big spank down. So, yeah, that's where the mood is at the moment. We've just got to see how that plays in the next couple of days.
Also, Peter, the run-up also came into the markets on fears of what would happen if a price cap comes in or there is an embargo from European Union, and the Chinese demand is something that the markets really played on the higher side. All of that premium really seems to be getting out right now.
Well, it could be. It's maybe a little point of evaporation, Manisha, and that's probably not unusual because it was probably all baked in, and that seems to be the storyline at the moment. So we've just got to see again, as we've discussed, the COVID situation's come to an end pretty much in China. The rebooting of that whole economy and how quickly it takes to turn it around to a consumption base. You're talking, as far as transportation, every factor across the nation, and the overall themes moving forward. But as we know, Russia's considering setting its own oil price floor in response to the EU and the G7, and that still hasn't been, finalised.
Oh, yes. How are you now looking at the price moving forward? If I'm assuming, while of course there will be data that's coming in, but how important is the 14th December US Fed meeting in an event of a 50 basis point rate hike? How would you see that reacting to crude?
Well, I think it's baked in. I think that already has been pretty much absorbed by the market. So unless we see something on the surprise side, where the market is at the moment, Manisha, I think we've just got to work through to that 14th and get, it's still nearly a week away or just under a week away to get a true theme as far as how this weekend goes and leading into next week. News stories, what's happening with other banks across the world, the overall themes coming out as far as inflation stories. So, yeah, every day presents itself with a new series of issues and dilemmas, and that market sentiment, what impact it has from a trading perspective and price discovery.
Peter, also, if you had time to pencil in yet on what is the kind of global demand and supply that we are working with, if you have those numbers with you, because the EIA data is out and they're expecting 100.8 million barrels per day of a demand and 100.7 million barrels per day of a supply. Also, when you look at the price view itself, some of those numbers are out. EIA is looking at $92 off an average for the next year. Fitch is talking about 95. Wood Mackenzie at 95 as well. But there is $100 per barrel of a price forecast back yet again from Bank of America, Goldman Sachs, World Bank itself, and Enverus Intelligence talking about levels of $100 to $110 per barrel as well. So there is still a lot of divergence on how the crude prices could be in the next year. Any numbers that you're putting out?
Well, I think first off, Manisha, we understand those numbers coming out of the EIA, just under 101 million. So there's the first part of it. The second part is price. What happens? I want to see what happens as far as US dollar, whether it gets tanked further and you see it down at that 101 level for that US dollar index, currently sitting at about 105. So if that continues to crater and we see further strength as far as yen, look at what happens as far as euro and the pound, then yes, you probably will see crude edge up, maybe 85 to 95, Manisha, but there's a lot of things can happen in a year in crude market, I'll tell you.
Well, I also was reading reports on how people are expecting crude prices to range between 65 on the lower side to 105 on the higher side. We've clearly seen that kind of a range in this year.
Yes.
What's your sense on what could be the range in next year then?
Well, it could be, Manisha. I mean, we don't know how much lower this can go. I'm worried about what those bankers are saying and the mood on Wall Street and the overall situation as far as debt, China, all those sort of points need to be worked through. So it could edge lower. We've got, what is it at the moment? You've got WTI at $73 a barrel. I won't be surprised if it's got a 6 handle, but I'd be, I don't think it's going to be there for long, but it just seems to be in a bit of a downdraft at the moment. And then to the upside, well, you listen to the Bank of America and they're saying 100. So maybe it's got that sort of range. It's going to be wild. It's going to be not straight up. It's going to be volatile. And really, that's what traders are after, Manisha. Movement. I don't think it's going to disappoint in 23.
All right. Thank you, Peter, as always, for joining us. So that is the kind of range that we can expect in the crude oil prices, ever as volatile for 2023 as well. But with that, it's a wrap on Halftime Report. Business Lunch takes all the action forward.